This message is brought to you by Nuveen. What does it mean to invest like the future is watching? As one of the largest global investment leaders managing $1.3 trillion in public and private assets, Nuveen is uniquely positioned to take on tomorrow today.
Combining over 125 years of deep expertise across income with innovative alternative solutions, Nuveen adapts to the needs of investors as they change, offering reliability, access, and foresight to its clients, communities, and the global economy, all in the pursuit of lasting performance. Nuveen, invest like the future is watching. Visit nuveen.com/future to learn more. Investing involves risk. Principal loss is possible. Welcome to Animal Spirits with Michael and Ben. We have one request of you, please, if you are a financial professional, advisor, investment manager, portfolio manager, analyst. We want you to take our survey. We put it out last week. We're going to do one more plug in the show notes. Click on the show notes and wherever you listen to your podcast. Go to irrelevantinvestor.com or wealthofcommonsense.com. There will be a survey. We want to hear from more financial professionals.
And also, anybody else who missed it the first time around. We'd love to hear from you.
All right. I got a take here. So the market is rolling over. The speculative stuff is getting dinged pretty good. I had this take here before this stuff all kind of started happening. There's no euphoria in this market. This is like a kind of, it feels this year like a joyless bull market. And so it doesn't, for all the bubble talk and everything, like this is going to be crazy. I don't think we ever got to a euphoric phase. So
I disagree.
Okay, let's hear it.
So there is obviously no euphoria today. However, over the summer and into the fall, when OpenAI was making announcements with everybody, and Oracle, for example, whose stock jumped 25% on the day, there was absolutely euphoria. Now, it's not here anymore, but one of the largest market caps in the stock market, adding several $100 billion overnight or whatever it was, that was absolutely euphoric behavior.
But do you feel like anyone wants a bubble? Like anyone is happy about it?
Wait, hang on. Do you disagree with what I just said, or are you? Yeah, actually, that was euphoria.
I guess that was like an overreaction. But again, I think the euphoria is in the tech CEOs, not the end investor.
Well, it's certainly not anymore. It's over. Whatever euphoria we had is gone.
Listen, if that, let's say that was it. That was the height of the AI craziness. If that was it, that was a weak bubble. Okay, that was nothing.
Okay, so let me ask you this: what is it over?
No way. It can't be. There's no way. If that was it,
love it. I love it, Ben. Finally, a take.
No, I'm saying if that was it, that was the worst bubble ever because we never got the exciting part, like the really big blow off top. Come on, if that was it, that was weak. That was not a good bubble.
I agree.
Worst bubble ever.
I agree. I would say 75% confidence that wasn't it.
I think whatever's going on right now is healthy.
This is a very healthy reset. You need skepticism. You need the wall of worry. Unless it's time to worry, then you don't need it. But
I don't have these massive gains in these junky stocks forever. There's no way that could have continued.
Yeah, the difference is that the fear seemed warranted. I'm not going to completely sweep them under the rug. The fears are warranted. They're justified. The pullback is healthy. And also that wasn't the top.
How about this? I think there's so much skepticism about like, gosh, this is good. This is a bubble. Expectations are being pulled forward. I think that mindset is actually good for this whole thing.
Yeah, it's keeping a lid on the euphoria.
I love it. It's healthy. I really do think it's actually like kind of healthy. So who created the Degen Dow? Was that you Josh. And Josh? Okay.
Not me.
So Matt updated this for me through yesterday. And this is like the biggest degenerate stocks you can think of. Quantum computing and the meme stocks and all this stuff. And so this basket, I think he equal weighted them, is down 20%. The S&P is down 3%. It's kind of funny. The S&P is down 3% in this whole thing. So obviously a much bigger drawdown. And if you look at through the individual names, it's way worse. The Roundhill meme stock ETF is down from a high of 11 to 6.2. So that's 40% drawdown. Some of these stocks are getting absolutely...
Oh yeah, there is... I've said this before, I'll quote myself again. A healthy... corrections only look healthy in other people's stocks. If you own a lot of these stocks that are getting mauled, and there's a lot of stocks that are down more than 30%, like mega ones that Josh and I are going to talk about on What Are Your Thoughts tonight, it doesn't feel so healthy.
Yeah, we're talking like 30, 40, 50% declines in a lot of these names. But some of these stocks are still up like 100% on the year. So
Yeah.
I told you this. I heard a story about someone who said, hey, my husband has been trading quantum computing stocks all year. He made like $1 million. And it's like, come on.
Yeah.
You can't have it be that easy in this junky stuff. So I think this is all a good thing.
You know what? I think part of the overall story and why there's so much skepticism, like The Economist has this had on the cover last week, how
See, this is my euphoria thing. The media is not trying to stoke any euphoria. That's the biggest difference between now and the 90s. In the 90s, the media was all in on the euphoria.
And
this time it's not. It's so skeptical.
So Gavin Baker tweeted, Sam Altman's manifestly ridiculous $1 trillion spending commitments shifted the AI investing landscape. The market is more skeptical now. Ironically, makes an IPO harder for them. Also likely ended any potential for a 1999 style melt up, which is healthy. I agree with the last part, which is healthy. I don't think the 1999 melt up is off the table. But Paul Graham, very much a Silicon Valley dude, just said if you invested at the peak of the NASDAQ in March 2000, it would have been roughly 18 years before you were whole again, 15 years before the index reached the same point, plus another 3% for inflation. So I think that the euphoria is amongst the hyperscaler CEOs, as you mentioned. They're not relenting, and everybody else is skeptical. And I think part of the bigger picture story is, of course, overall skepticism of AI and it taking people's jobs. Matter of fact, let me play this clip. This is Gavin Baker. Not Gavin Baker, I'm sorry. This is Brad Gerstner on the All In Pod.
One of the major concerns I have is that AI is becoming deeply unpopular in America. Silicon Valley is losing the battle around AI. Doomers are now scaring people about jobs. They think all these job cuts that are going on in America are the result of AI. And number two, they're seeing their electric bills go up, and they think that's also the result of AI. I've talked with a lot of Republican senator and House members who say they are afraid to mention the words AI because their popularity ratings go down.
So there is skepticism everywhere. It is, as Brad mentioned, deeply unpopular. And it's part of this broader story of corporate America outpacing Main Street America. And people are sick and tired of all of the gains in the economy seemingly accruing to the Mag 7. People are just over it.
Imagine being in a blue collar job and thinking like, why should I want this technology to come here and take it and make things worse?
Yeah, nobody's rooting for it except for Altman and Satya, who is doing 4 podcasts.
But the thing is, all the skepticism we've had, remember when the DeepSeek thing happened? It's like, oh my gosh, it's over. Every time one of these hiccups happens and people say it's over, do you think that's stopping Mark Zuckerberg from investing in this more? No, the investors could continue to sell the stock, and that would maybe slow him down a little bit. But it doesn't seem like these CEOs care about any of the skepticism.
Mark's not stopping. Look what he did with Reality Labs. Look how far he pushed that. What was that? Tens and tens of billions of dollars of losses.
All I'm saying, it's like, come on. If that was the end of the bubble, then it doesn't really count.
That was weak. All right.
Healthy correction. That's where I stand. Stamp it. Healthy correction.
I agree. I tweeted this chart that I had Chart Kid create, and I took this idea from Dan Wang's Breakneck, I believe, or maybe it was Apple in China, actually. I think it was Apple in China. The numbers here are so insane. So there was chatter over the weekend that Tim Cook's run may be coming to an end. The numbers here are so insane that they literally, it doesn't seem right. I had a lot of people fact checking me, like a lot of people, like not mad. The numbers don't seem right. And I think what this does, we mentioned that there's no euphoria. Maybe the euphoria was in the market cap. Even though NVIDIA, the forward PE kept going down because they were exceeding earnings expectations, $5 trillion is a lot of market cap. $1 trillion is so hard to wrap your head around that Tim Cook, since he became CEO, added.
Which was what, 2011?
2011. So every single day, not every market day, every single day. And I believe the market cap was like $350 billion when he took over.
Yeah, it looks about right.
Was that about right? Okay. $700 million a day, Ben. $700 million a day in market cap added.
So I don't think people remember at the time, but when Steve Jobs passed away, Apple had a little bit of a sell-off and everyone's going, oh my gosh, this company is done, right? And contrarian guy catching the falling knife, I went in and I bought Apple then in 2011. Yeah, but I blame you. I sold it in 2015 when I came over to Ritholtz. I moved all my money over, and I said, I had the only 2 stocks I owned were Apple and Google in 2015, and I sold it in 2015.
They were both overvalued.
Obviously. But I don't think people forget that. People were so skeptical of Apple. Like, oh my God, if Steve Jobs is gone, how is this company ever going to
Yeah,
perform? Like,
Tim
it's
Cook,
over.
he's a manager. He's not an engineer. Like, what does he know?
So
All right,
wait, you posted this on Twitter and then it went viral and Elon Musk's replied to it. So you're don't even look at your replies today.
yeah, Elon said impressive. And it is. It's a wild stat. All right, back to the AI hate. So this week from the Wall Street Journal, Wall Street blows past bubble worries to supercharge AI spending frenzy. Also from the Wall Street Journal, when AI hype meets AI reality, a reckoning in 6 charts. There is definitely skepticism all over the place, and not in like journalism news. Like, let's look inside the market, what investors are actually doing. Lisa Abramowicz tweeted, "Tech bonds are getting hit hard of late as debt traders start wondering if they're getting left with the bill for the stock market's enthusiasm. Oracle's $3.5 billion of 30-year debt issued in September has cratered by 8% from the October peak."
Okay, you can't say cratered when it's an 8% loss.
It's a bond. That's a crater.
Cratered? Come on. Declined.
That's a crater. All right. On the positive
And
fundamental,
Oracle is the one of them that actually has taken out a lot of debt, right?
yeah,
They're the one.
on the positive fundamental side. Now listen, I think
Wait, I can't have Oracle crash because Larry Ellison has to fund me a new college football coach when Michigan fires Sherrone Moore. So I can't have Oracle crashing.
I bought the crash. Hand up. I bought it.
Who did you buy?
I bought Oracle. I sold Disney finally, and I bought Oracle.
How much did they fall by?
30-something%.
Oracle's down 30%. Okay.
Well, how's this? Another one from this morning. Where's this chart?
Yeah, you're right. Oracle's down 30. It's crazy when you look at and we're going to look at this in a little bit, but when you look at the drawdown profiles for tech stocks or pretty much anything, all these had 30 or 40% crashes in April. Then they came roaring back and now they're down 30% again. This year is a wild year in terms of volatility.
Where is this chart? Oh, here. Okay. Financial Times this morning. The headline was, like the AI trade, Oracle is now $60 billion negative or something like that. Look at this chart. It's a little bit lower in the deck. Oracle market cap. September 10th pre-market, Oracle and OpenAI announced a $300 billion AI data center agreement deal. Shares close up at an all-time high, up 37%. All right, that was a euphoria, up 37% on the day. 37% for Oracle.
That was nuts. You're right. Those numbers were insane.
Shares closed 8.8% below their price pre the OpenAI deal announcement, a loss equivalent to $60 billion in market cap.
Do you think part of the AI skepticism is not just the fear of job loss, but it's like everyone has seen what social media like did to tear apart the fabric of society, and they're like, do we really want to do this again?
Yeah.
We want to like introduce this technology that has the capability to tear apart society. But guess what? Are we really going to? That's the thing. We can't slow it down. So you can sell these stocks all you want. These companies are still going to. It's not going to stop. That's the problem.
Does OpenAI get to $100 billion in revenue? I mean, they have to for this to work.
Will Microsoft allow OpenAI to fail?
No.
See, that's the thing. If
there's too much money on the line. We'll get to that in a second. Put a pin in this because I have more of Microsoft OpenAI later in the doc. All right, Patrick Collison, founder and CEO of Stripe, said an interesting trend we're noticing at Stripe. U.S. startups are pulling ahead of their peers elsewhere. You see these charts, Ben?
Mm-mm.
All right, look in the doc. Software Startup Revenue Index. These charts showed average revenue growth for the software startups in each location. U.S. startups typically grow somewhat faster than those elsewhere. However, since mid-2023, U.S. companies have accelerated a lot.
I guess I would have just assumed this was always the case, though. It seems like U.S. startups have always outperformed. He
says, interestingly, this is not just because of AI startups. If we strip those out, there's still a big divergence. So here's their hypothesis. These U.S. startups, even those that aren't AI companies, are adopting new technologies, of course, AI, stablecoins, et cetera, faster than companies elsewhere. This pattern of faster adoption among U.S. companies was also seen with the internet itself. Whatever the cause, the pattern is striking. I think you're going to see it in the fundamentals. Yeah, I don't think the story is over by a long shot.
This is not an original take, but the tech industry is going to be the next financial industry. Think about how hated bankers were after the 2008 financial crisis. That's the tech industry now. They are at the top of the perch. They are going to be the most hated industry after this is all said and done.
Yeah,
for sure. And it's not even. I don't think you can debate that. Their technology, the industry is going to be hated. Mm-hmm. They're going to be the villains. All right. Spencer Jacob from the Wall Street Journal had a post, why we could use a good long bear market. Stocks have only experienced brief downturns over the past 16 years, creating dangerous complacency. And I think there's a lot of people who have this. Now,
That's true, but I reject that idea.
All right, let me go through some of his stats, then we'll just talk this out, okay? He said long bear markets accompanied by recession discredit the last boom's wildest themes and its cheerleaders. They also remind us of what capital markets are for, mostly matching good businesses with patient savers and nest eggs. The average time to reach previous high when bear market was accompanied by recession was 81 months. It took just 21 months without a recession. Over the past 16 years, downturns have lasted less than 8 months before the old high was reached. Hardly anyone younger than 40 now even had a 401k during 2007 to 2009 wipeout. Most Wall Street pros hadn't graduated from college yet. Bear markets are educational, but the tuition is a doozy.
Why do we need a recession?
Well, there's a lot of people who think we need to just clear the decks.
Clear the decks. Right.
Right? We need to start over, wipe the slate clean. I don't necessarily agree with that, but I guess the point is we need to have a slap on the wrist. You need to touch the hot stove every once in a while to understand, like, whoa, you can't take this much risk. It doesn't make sense to take this much risk, and there's gonna be a comeuppance. I think that's the idea a lot of people have.
We've had it. We've had it multiple times.
My other thing is, don't quote me on this. I really do think this.
I'm quoting you, Ben.
Right.
Whatever you're about to say, I can't wait because I'm quoting it.
I really do think that the speed of these recoveries, this is just going to be the new normal. I don't think we're going to have these extended 81-month, this is going to last forever. I think we're past that. I think the speed of financial markets, the speed of information, the speed of technology means that these recoveries and these downturns are both going to happen faster than they did in the past.
Ben, look at this chart. So I'm looking at the drawdowns of the S&P.
That was impressive that you just pulled this up on Riverside like that. How did you?
Thank you. I'm very good at this.
You're like Tom Cruise in Minority Report, moving things around and.
Okay. Right. So let me throw this in the doc so the boys can grab it. To Spencer's point, and I like Spencer, so what I'm about to say is nothing against him.
Yeah, he's good.
Don't love the take. All right. We had big, long bear markets accompanied by recessions, both in the aftermath of the dot-com bubble bursting and after the GFC, of course, right? Stocks fell 50% and 57% respectively. That's the S&P. And we haven't seen a long bear market accompanied by a recession. However, look at all of these sell-offs over the last decade. There's 1, 2, 3, 4, 5, 6. I mean, there's a lot of them. Now, sure, most of them outside of 2020, which was a man-made recession in 2022, which, you can quibble with that a recession or not. I happen to think it was. Most of them were short-lived. But
you're a recession truther now in 2022? When did that happen? You don't remember at the time we were arguing this is not a recession?
Oh, really?
Oh, yeah. You turned into recession. Here's the thing.
Wait, no. That in and of itself, we could spend 20 minutes on that. I don't know that I want to declare that it was a recession.
You sound like one of the reply guys to me on my Twitter.
No, you're right.
No, recession.
There was a lot of nuance in there. There was.
You can't have a recession with 3.5% unemployment.
You're right. Nope. I will cede the point. One that is accurate for sure. There were industries in recession, big ones. Technology.
Yeah, there always will be though.
Technology. No, but technology, monster industry, tons of layoffs. Real estate, housing, iceberg recession, deep ice recession, Antarctic recession.
We have a diverse economy.
You're right. Was the economy in recession? I would see the point. You're right. It wasn't. But the point is, investors need a reminder that risk exists. How many reminders do they need? They touched the stove many times and got burned.
Here's the other thing here. Those 2000 to 2002 and 2007, 2009, those events are very rare.
Right.
They don't happen all the time.
Right.
You don't get those once a decade.
Yeah, those
you
are
get those
crises.
once every 2 to 3 decades.
Yeah, I don't think we need those.
No, those like reset the system things. 2008 might be a once in a lifetime crash for us. It might be. Those things don't happen that often. Because think about 1990. This is on his chart right here where he talks about months to reach previous high. There was a recession in 1990. There was a savings and loan crisis. The real estate industry was very bad it's kind of a forgotten recession. The S&P fell 19%. It didn't fall 50. It didn't fall 60. So there's these times when you can get a recession and not have the whole system crumble beneath your feet.
Yeah, I would suggest that we probably in our lifetime, I would say like I don't know, minus 175. We'll see another 50% decline. Feel pretty strongly about that.
Yeah.
But do we need one? Like, is anybody going to be better off because of one? Absolutely not. We should avoid that like the plague.
I think there is this feeling from some people that, listen, we need to everyone needs to get a slap on the wrist, and people need to experience pain, but not me. I'm not going to experience pain. I'll be fine, right? I think a lot of people who want this like system reset think that they'll be okay.
They want, the scene in Jurassic Park where Samuel L. Jackson says, "Hold on to your butts."
Yeah,
and he reboots the system. Many people are rooting for that.
Yes. And
I guess what? Then Sam
Jackson
is left with just an arm. Just an arm.
Careful what you wish. Did he get his arm chewed off? Okay.
Remember Laura Dern? She's just holding his arm.
Oh, yeah.
That's it. Yeah. You don't want to be just the arm guy.
All right. Let's talk about Michael Burry. So he put out a note last week saying that he's closing down his hedge fund, which I didn't even realize was still open. And I want to make this point here. There is a difference between making a legendary trade and being a legendary investor. Warren Buffett is a legendary investor, right? Julia Robertson, legendary investor. There's a lot of people I could name. Stanley Druckenmiller. Michael Burry and a lot of the people who came out of the 2008 crisis made a legendary trade, right? John Paulson made a legendary trade.
Once in a lifetime. Unreal.
Couldn't do it again, right? He did all these other things and it didn't work. And honestly, so Michael Burry he's in 2021, he called for hyperinflation. In 2019, he called for an index bubble. He said to sell like 1 million times. I listened to Michael Lewis has his podcast on. He's been doing this retrospective of The Big Short. And he pulled all the people from the book and he's interviewing them again. Like Greg Lippman. He's interviewed all the guys who worked with Steve Eisman. I can't remember all their names. And he interviewed Steve Eisman. And it's funny because when you hear these interviews, these people are almost nostalgic for that period. And I feel like Michael Lewis, in a way, feels nostalgic. Like the people who called that crisis.
And, they were gods.
Yeah, and they feel like they want it to come back. Like they miss that period. And so Michael Burry last week tweeted out a picture of Christian Bale playing himself in The Big Short movie. How could you have that experience where you're the star of this best-selling book and then Christian Bale plays you in a movie? How could that not mess with your head?
Yeah.
And how could you not want to call the crash all the time after that?
Yeah. I mean, when you're on the top of the mountain, there's only down to go. Like that's
How could that not screw with you? So again, these people made legendary trades. That does not make them legendary investors. And it seems like Eisman is really the only one who pulled out of that vortex of the negative, right? And kind of, but none of these people ended up having, you don't know how their results have been since then because they probably haven't been very good. You'd hear about it. If they were like compounding capital at 20% a year since the great financial crisis, then it's like, oh my gosh, these people are legendary investors.
Well, you're right.
They shorted the housing market and then they turned around and made money on the other side too.
There's another takeaway. Don't follow what these people say, because I think I saw Science Performance tweeted recently and it was fine. Despite everything that he said that has been wrong publicly, it doesn't matter. They're not making an opinion and then sticking with it come hell or high water. Like
right.
They're trading, they're moving around, they're responding to the market.
Right. And when they say this is a bubble, they're not going to cash. And
right. So take what they say with a grain of salt. It doesn't matter who they are. Remember, in 2020, it was Druckenmiller. I can't remember who else was saying it, that like this is the worst environment they've ever seen, and it's going to get a lot worse. It was all of the geniuses.
Yes, that's the point. Just
nobody knows
when these people make their predictions. But yeah. So there's a difference between making, and I honestly think we're going to have more of this where people make legendary trades as opposed to being legendary investors. Like we're never getting another person who has a track record as long as Warren Buffett.
No, it's impossible.
I can say that'll never happen again.
That will never happen again. All right, boomers are passing down fortunes in way, way too much stuff. Bloomberg wrote an article about the great stuff transfer, as it's being called.
Great idea, right? This is the idea of this story. Kudos to Bloomberg on this one.
Great idea. I remember when my grandfather died. And he had no money, lived in a tiny apartment in Florida, whatever, 1,500 square feet, whatever it was, maybe even smaller. And I remember cleaning that out was a bear. Cleaning out 3-4 bedroom houses is going to be a lot.
Yeah. So I think what you have to invest in the coming years is dumpster rentals. How do you invest in dumpster rentals? Because think about all the stuff you're going to be throwing. So they give all these stories about people throwing stuff away, baseball cards in China and collections and hoarding stuff.
Cold wallets.
But think about all the renovations that are going to have to be done on these houses that people have lived in for 40 or 50 years. Like Honestly, like I'm going to start a dumpster rental company. You know, because when you do a renovation, they put the dumpster in your driveway, right? And then everyone in your street, all your neighbors have to ask, "Hey, what are you guys doing over there?" Right? Everyone has to ask. So I put some pictures in here of my stuff. So my dad has all these baseball cards and football cards from like the 1950s and 1960s. Check some of these out. I found these pictures that I had last time I went there.
Mike Schmidt, classic mustache guy.
So we're talking, he's got Willie Mays, Pete Rose, Al Kaline, Roberto Clemente, Mike Schmidt.
I feel like
Bob
Mike Schmidt drank a million beers. He was definitely a Here Comes Trouble guy.
I think it's a Nolan Ryan rookie card. I put this into ChatGPT and I said, hey, are any of these things worth anything? And they're like, listen, if the edges are frayed, probably not. They're probably worth a couple $100. But he's got some really good ones from like the 50s, 60s. So that's what I'm going to walk away with someday.
Great.
That's my stuff. But yeah, I say go long dumpster rentals for renovations too.
So Ben and I did a podcast with Derek Thompson on the topic of are young people screwed? And there's a lot of companies that are blaming the weakness in young people for their woes. A lot of the bold companies, Chipotle, Kava, they're not mentioning their overexpansion. They're not mentioning how expensive their stocks were.
Such a cop-out. Blaming young people?
Yeah, they're not mentioning how expensive their slopples were. So who do you trust? And listen, there's obviously lots of shades of gray here. But Chipotle or SoFi? So SoFi, who I would say SoFi definitely caters to that audience. Anthony Noto, CEO, said, we've seen very strong performance of credit. So we're really not seeing any deterioration in the consumer at all.
Right. So it's consumer choice, not that they don't have any money.
Right.
And you were early to that train. You got off Chipotle like 3 years ago.
I really was.
Now you're coming back. See, you're...
No. I'm not coming back. And in fact, I have no interest in dumpster diving in the stock. I listened to the conference
call. Wait, so
how
much is the stock down? 50%?
Tons.
Tons.
I listened to the conference call. You know, I think this is the quarter that I've listened to more conference calls than I ever have. And I'm not saying that there's necessarily like quantifiable edge here, but there is definitely quantifiable insight.
55% drawdown. This feels like a stock every time it falls 50%, like it's a screaming buy.
Yeah. Well, not this time. I'm not buying it. You know why? I don't trust the CEO at all. Not for a second.
That is true. They have the new, because their CEO left and went to Starbucks, right?
Not for a second. So
okay,
I listen.
So because of the fact that he is like pulling a sleight of hand and not being honest, you don't trust him.
I don't trust him.
Young people. Okay.
No, that was in the opening remarks. And the Q&A. I did not like what I heard. So last night on this topic, I listened to Apollo, legendary founder, investor, Mark Rowan. And I listened to, and Apollo is one of the biggest private credit players in the market. And I listened to Blue Owl's Mark Lipschultz, who was clapping back at Jamie Dimon. And Mark Rowan was asked about the opportunity in wealth management and the pushback specifically with rates coming down, how attractive is private credit? Listen to this answer from Mark Rowan. Here is Mark Rowan answering the question of how investors should think about declining rates, because these are floating rate instruments.
Private lending was a better business 4 years ago, and 3 years ago, and 2 years ago, and last year. By the way, I wished I owned NVIDIA 4 years ago, and 3 years ago, and 2 years ago, and last year. This is fundamentally what people fail to understand. The rotation into private credit is a rotation out of equity. That is what investors are doing. That is what we observe. They are making a decision to take risk off because they perceive the ability to earn long-run equity returns in first lien debt, top of the capital structure, as an attractive opportunity. But I think we cannot, as an industry, deny that there was more value, just like there was more value in the equity market.
Okay, right? The guy's telling...
Good answer.
Yeah,
good
great answer. The guy's telling the truth. That is a phenomenal answer. I don't have to repeat what he just said. You just heard it. He's telling you the truth. Okay, now contrast that with Mark Lipschultz when he was asked a similar question about how investors should think about what's going on. And by the way, I think we have Blue Owl later in the doc. Not pretty what's going on in that stock. All right, so Mark Lipschultz, well, he sounds defensive. He sounds antagonistic. All right, so an analyst asked a question about some of the publicly traded BDCs, which are getting murdered. So tell me if this answer makes you feel better or worse as an investor, Ben.
So as to what investors don't understand, it's probably hard for us to give you a comprehensive answer. In fact, you obviously talk to a lot of investors. We can offer some theories. I can certainly tell you what we're doing. We're doing two things that I think at the end of the day, will solve this problem. One, we are executing. Business is good. Business is continuing to be good, and we're focused on continuing to deliver. We haven't seen an opportunity as good for investors and by extension for Blue Owl as the digital infrastructure investment cycle that we're in. And so we're just going to continue to deliver results for investors and continue to deliver. Frankly, we're short.
Oh, you're just going to continue to deliver, and business is good? Really? If business is so good, why is the stock down 48%? Why is the BDC down whatever it's down? Why are you merging some of the funds? Why are you gating, I don't know if they're gating redemptions. Why are they limiting redemptions? So you listen to these people and it gives you some sort of insight as to who you want to put your money behind. I think it's incredibly valuable listening to
I think someone asked us that a few months ago, like, what do you actually get out of these earnings calls? And that's like, are they being level with you? And this was always the thing for me when I used to be in a manager of managers business and I'm picking the managers to outperform or whatever, the ones that I appreciated the most would tell you straight up when they were underperforming, listen, this isn't our cycle. We're out of style right now. Or listen, we missed it. We missed it, but whatever the trade was, we missed it. We're not in what's working right now, as opposed to the people who make excuses and say it's the Fed, or we would have been right if only this would have happened. Like, I always appreciated the people that would level with you and be honest with you. The people who like BS you, like that guy, you can't trust them to tell it to you straight. So how are you going to trust them to run a company? Okay.
Back to, sorry for the tangent on the SoFi thing, but back to what we were talking about. Here's a good chart from Apollo. About 5% of the US population are experiencing third-party collections. The blue line is the dollar amount, and unfortunately, the dollar amount is up and to the right as everything has gotten more expensive. No surprise there. But look at the proportion of consumers with collection, which is the green line, Ben. Now, it is going up, but off historically, literally historically low levels.
Way low. That is pretty crazy. Okay, so it went from a high in the mid 2010s of 15% now down to like 5%. Okay, remember a couple weeks ago I said, hey, listen, when the stuff starts getting disrupted and the economy slows, they're going to take some of these tariffs off as a form of stimulus. It's already happening. Trump administration is preparing tariff rollbacks on goods from countries beyond those that have reached agreements with the U.S. in an effort to lower prices. I think they're looking at coffee and food and some of these things. Do you think that the White House saw the employment data and got a little freaked out, or saw the whatever data that we didn't get and said, all right, you know what, actually, we're going to pull these off? But this makes sense that this would happen, right?
I don't know. I don't know their motivation. I do know that last week when I was in Washington, D.C., it was very eerie. It was an absolute ghost town. I had a great time, by the way. I love to wake up early, walk around cities. I was listening to the Harry Truman book.
Man, what a wonderful, walkable city DC is, right?
Phenomenal. Harry Truman, who actually redid the White House, who was the first president to really invest in the White House, and say, wait a minute, we got to up our game here. Did you know, this is news to me because I don't follow politics like this, during the shutdown, because I have a friend who works for a congressman, the Congress people, the elected officials were getting paid.
Yeah. Isn't that the worst thing?
And my friend hasn't had a paycheck in 7 weeks.
People in TSA weren't getting paid, but the politicians were. Isn't that awful?
I think everybody agrees. It doesn't matter where you are. Absolute horseshit.
The politicians should not be able to hold the country hostage because they can't come to an agreement.
Absolute garbage.
All right. What's the Chardonnay price?
Okay. This is, Ben, once in a while, you get a new blogger. It's rare these days. I feel like the heyday of bloggers is long over, although Substack, actually, maybe that's not true. Be that as it may, there's this guy who writes a blog post, a Substack called Chardonnay. I believe that we referenced him a couple of months ago. So he has this incredible chart that looks at CPI, which includes obviously a basket of goods. But what he did was he looked at, hey, let's take away some of the things that are not like everyday inflation. Let's take out used cars. Let's take out some durable goods, washing machines. Now, it's not that these don't matter, because they do, but he wanted to focus on like everyday inflation.
And the stuff people really think about.
I mean, this chart is just magnificent on the eyes. So these are the TLDRs. So he said, television's gone, mattresses out, used cars get lost. So what was once 338 lines suddenly became about 40 lines of goods and services that show up in an everyday budget. Okay. Before the vaccine rollout, official inflation and my index were basically indistinguishable, right? Same thing. Once inflation picked up, the official numbers started to come in much hotter than what my index showed, likely because used cars ran red hot in 2021, in 2022.
Oh, yeah. But it's probably housing was probably a big part of it too.
Since then, I think that's an everyday type of expense. Since then, the Chart A price index has been running about 1 to 2% hotter than the official CPI. Lately, though, they've started to converge. And I think this is what people are talking about. When they say CPI is not whatever percent it is, like I feel it feels higher. And guess what? Yeah, it probably is.
Well, no, it isn't, but it's just the stuff you're buying feels higher.
Well, yes, that's the same thing.
The buying more often though. But
yeah, things that you buy every day are higher
but
than.
no one ever feels like the aggregate economic data is them because their personal experience is
True.
no one ever believes the inflation numbers.
True.
If you just bought a used car, you go, inflation is out of control. If you bought a television, you go, oh my gosh, deflation.
I'm thinking a lot about my new car these days. Oh, forgot to mention this. I got into an accident.
Uh-oh, what happened?
So I haven't been in an accident since I was like 19 years old. I'm in Dick's.
Whose fault?
When I was 19?
Oh, now.
Oh, but you tell me whose fault it was.
Okay.
It was a one-car accident.
You hit a light pole?
Yeah, I'm in the parking lot in Roosevelt Field going to Dick's with Kobe, and pole came out of nowhere. I honestly don't know what I was thinking. Like I just didn't see it, and it was literally it was.
You're backing up, or you're going forward?
No, I was going straight. It was right in front of me. It was like a handicap pole. And I saw it. I slammed on the brakes, and Kobe's like, "Daddy!" So I get out, and not damage that I'm like taking to the body shop, but like, yeah, it looks. I mean, my car is definitely.
So you decided that your car wasn't underwater enough. You had to like make it even more underwater.
Yeah. So I don't know. I don't know what happened, but I went into a pole. So I've been thinking about what car I'm going to get a lot as my car lease comes due. I think I might get a Jeep Grand Cherokee, not a hybrid, just a straight up gasoline Jeep Grand Cherokee.
Okay, I feel like you've changed your mind on this like 13 times.
I have.
You went from a Range Rover to a Toyota.
Yeah.
Now we're at okay.
Right down the fairway. What do you think about
that? My mom used to have a Cherokee, and I drive it all the time. I loved that car. Or wait, yeah, it's a great car.
Right? It works. A to B.
Yeah. All right, let's talk more AI stuff.
Yeah, so Bezos, Project Prometheus, coming out of the gates with $6.2 billion in funding. I guess he's not going back to Amazon. I guess I could put that hot take to bed.
Duncan wants you to get a Lexus.
What's that?
Duncan wants you to get a Lexus.
A Lexus?
Yeah.
Somebody did tell me to get the Lexus, the TX or the GX. I can't remember which one.
But let's say you're a technology guy like Bezos, been in it your whole career essentially. Like you're gonna let this opportunity pass you up and not get involved. Of course, you got involved.
Yeah. So it's so over. Come on, it hasn't even started. We don't even have the robots yet.
All right. So Jerry Newman was on Odd Lots with Joe and Tracy, and I liked he had kind of a contrarian take, and I don't know if I buy it, but he said, "What happens if OpenAI gets hit by a bus? Right? OpenAI goes under." Microsoft is out a bunch of money. A whole lot of big companies are out a bunch of money. I don't think much happens to the economy. In the dot-com bubble, people were spending money for their options before they were liquid. It was a much different dynamic. So he's saying, like, so what if one of these big AI companies, and I said, Microsoft is not going to let them go out. Like, none of these companies, OpenAI cannot go out of business. Microsoft would just,
if I love a contrarian take because everything is consensus these days, including everything that we're saying.
Yeah, it was very contrarian. That's what I liked about it.
If OpenAI, and I like that guy, he's smart and entertaining. But if OpenAI gets hit by a bus, we're in deep, deep trouble. Because
like the economy is.
Well, the stock market's going to crash. And you would think that, let me not hedge that. The stock market crashing will have a deep impact on the economy. Obviously. So.
Deep? I don't know. I don't know about deep. Just from OpenAI, I don't.
It's
I
not
kind
just
of
OpenAI. The entire economy is resting on the shoulders of these hyperscalers.
no, it's not. Get out of here.
No, I think it is.
The entire economy. Come on, man.
All
Get
of
out of here.
all I will not get out of here. All of the growth in the economy is happening because of the hyperscaler spending.
Grok, is this true? Actually,
So, okay. So in terms of like what OpenAI is actually paying Microsoft, this is from the Financial Times. So the OpenAI quarterly inference cost at Azure. Now this is only inference. It is not the more expensive part of the AI story. So they said OpenAI appears to have spent more than $12.4 billion at Azure on inference compute alone in the last 7 calendar quarters. So forget about the promises that have been made to Oracle and every other company on the street. Where do you think all of the beat from NVIDIA is coming from? It's coming from the promise of these LLMs and what they're going to deliver. So the entire market rests on the shoulders of OpenAI not getting hit by a bus.
so speaking of Microsoft and CEOs are tell like it is, Satya Nadella was on the Dwarkesh podcast, and it was so refreshing to hear a guy who just like told it like it is and totally was not a bullshitter. And like that guy, that's a person I trust.
I trust Satya. Can I tell you something? I have terrible listening comprehension, I think, when it comes to this tech stuff. I don't understand any of it. I listened to the entire podcast, and there was like not one part that I was able to like pull out and say like, oh, but then I see people tweeting the clips, and I'm like, oh yeah. When I see the clip, it makes sense. But when I'm listening on my own, I'm like a child. Like I have no idea what's happening.
It's hard to understand some of the AI stuff that because they're getting so technical about it. So here's the thing. There's two things. Two ways to look at this. One, the market already knows what's going on, right? Like, how could you think you're smarter than the market? This is like for all the people who say, like, look at the depreciation expenses of all these data centers and GPUs are going to be depreciated in 3 years and you have to buy them again. Like, the market knows this.
Wait, hang on. Can I just interject one thing? I think the opposite is true. The market doesn't know this. The market doesn't know anything, which is why you're seeing such violent price swings because we're all just guessing. We don't know. That's the point. We don't know. Nobody knows.
But the thing is, the market is always smarter than everyone. The collective,
yes, of course.
But,
of course.
But two things can also be true. The other thing is sometimes the market is wildly off the mark.
Yes.
Right? So how do you wrap your head around like, listen, everything everyone's talking about with AI, everyone already knows it. We all know it.
But nobody knows.
It's not like this because
everybody knows, but nobody knows.
People think, well, yeah, no one knows that. That's obviously the problem. By the way, I asked Chat to do some coding for me this week. I asked Nick Majuli, hey, how do I fix this thing on my blog to make it look bigger and fancier? And when people sign up for my newsletter, I wanted to stand out more. Nick said, just put it in ChatGPT. And it gave me the code and allows me to copy the code. And I said, well, where do I've never coded anything before. Where do I put this in? And it was magical.
Did he say ask ChatGPT?
Yeah. Well, he kind of showed me a little bit, but it's magical.
I did something similar. There was an arithmetic problem, and I'm not even kidding. It was straight up arithmetic, not like plus, but I couldn't figure out for the life of me. I was staring. I'm like, wait a minute. I'm looking at a spreadsheet. I said, I don't understand what I'm doing wrong. And I said, hey, wait a minute. Boom. Yeah, 2 seconds.
But why do you think technology people are so excited about AI? Because they're the ones doing that.
How about this? The set arithmetic. It might have even been calculus. I don't even know what type of math it was. There was no scenario in which I got to the bottom of it. None. I could have stared at it for 7 hours.
All right. We've been talking about stocks falling a lot in one day, and we had a guy email us in and give us an answer. He said, Ben raised a question: how many securities have had 30% drops? He said from March 31st, 2020 to today. So just basically this decade. For the S&P, it's only 15 names. Russell 1053, Russell 2469. He also said, he said, if you do 20% instead of 30, the numbers quadruple, to 60 names, 205 and 955. So actually, I guess fewer names have fallen 30% in the S&P than I would have thought, but a decent amount have fallen 20%.
Yeah. It's funny, Bespoke did something similar. They said 19 stocks have fallen 30% of their earnings reaction days this season. And the median market cap of those companies was less than $3 billion.
Oh, versus 14 that have gained 30%. Yeah. So this does happen.
Of course it does. But the median market cap was $3 billion.
Right. So it's small. Right. It happens all the time in the Russell 2000.
Yeah, all the time.
All right. This is a really good question from #@longequity. Sometimes compounders stop compounding. What lesson do you take away from this? So he shows Nike and Fiserv and Charter Communications and Estee Lauder and like 6 of these companies that had these beautiful long-term charts that have now come crashing down on the other side. Like these are compounders And in the last year or two, all these things have come back down to earth. I'm trying to catch a falling knife in Nike. So I thought this is a good question. Like, what do you take away from this?
So the answer, by the way, I don't like Nike's knife. I think you're going to cut your hand.
My whole thesis with Nike is I'm betting on Caitlin Clark. That's it.
Okay.
I'm betting on Caitlin Clark to like have her own shoe line, and as long as she stays healthy, that's my Nike thesis.
Okay. That sounds, no offense, that sounds like my thesis when I was back in 2010 when I bought.
Yeah.
Which miner because of the Olympics? Oh, I bought like an Australian mining company. Was it BHP Billiton? Billiton.
Yeah.
Is that even the name of it?
Medal.
Because yeah. Anyway, don't love that thesis, but hey, credit to you. So, all right, Buco Capital has a great take on this take or the answer. Like, what's the takeaway? Buco said, the actual answer is that this is the rule, not the exception. Great returns attract competition. That's the beauty of capitalism for the consumer. The more interesting question is what companies do to avoid this fate. The new book that I'm listening to is called Invention. The book, the autobiography of James Dyson, the guy of Dyson, the vacuum cleaners.
Oh yeah, I have that book somewhere. I just never read it.
I
just bought a new Dyson this week.
The vacuum cleaner. Or
They're magical.
Else?
They work so good.
So I don't know that I would necessarily recommend the book. Although there is a great quote that I wrote down. He said, "Everything changes all the time, so experience is of little use." I feel like that's so applicable in the stock market.
To markets, yeah, that's pretty good.
So, but anyway, my point was this. So when he was building the vacuum cleaner before the Dyson, I'm sure you had a Hoover vacuum cleaner growing up. I did, right?
Yeah.
Like it was so 80s.
Do you remember the bags with the zippers on them and stuff?
Okay, so that yes, I do. So the point is, I think they made $500 million a year selling the bags. And so it was classic innovator's dilemma. Yeah. Like their entire business was the bags inside of the vacuum cleaner. So they just were going to go
printers and ink cartridges.
They were that was their business model. They were never, ever, ever going to do what Dyson did. And then guess what? Dyson killed them.
Right.
So that's it. That's business.
All right. Cliff Asmus was on AQR, and he talked about how AQR is, he was on Odd Lots, and he was talking about how AQR is thinking about making a push into sports betting. And I thought about this because I've heard a lot of people say, and I wondered if this is good or bad for like DraftKings / FanDuel / Polymarket / Kalshi, all the ones that have the betting. Is this good or bad for them to have the big whales come in? Because you'd think it'd be good because it would add a huge layer of liquidity. It would be more volume. But is it bad if they're arbitraging away? Because I've heard stories from that, like FanDuel and DraftKings. If you're a whale of a gambler and you're really good at it, they will find you and they will kick you off the platform. I don't know if this is true.
You know what? I'm the opposite of a whale. I get no incentives. They say, "Hey, look how much this asshole keeps losing. We're not even giving him any incentives. He just keeps losing."
But let's say AQR and Citadel get into and they arbitrage away a lot of the parlay stuff, right? And they see there's massive mispricings because people who are betting on them, like you, are idiots and don't know the odds. If
okay,
they come in,
am I an idiot because all the Bengals had to do was not literally let the Steelers get 6 points on defense in the final drive? Am I an idiot because that happened? Yes, no. I guess I am.
So do you think, would this actually be a bad thing for these companies? Because they couldn't make these enormous spreads anymore.
Yeah, that's a good question.
Like, would they make it up on volume, or is the spread the thing for them, or they make all the money off of idiots who don't know what they're doing?
Very good question. I'm not sure is the answer. I don't know.
All right. So Bitcoin is getting killed. I think it was under 90,000 last night. And is this one of those things where crypto is signaling more pain to come? Or is this just like a risk-off asset and like, this is it? Because I looked at this. So it's crazy. The volatility I mentioned before. This is IBIT was down almost 20% on the year through April. Then it was up 35% just a couple months ago. And now it's like flat or down on the year. Like, remember when people said the ETF is going to take volatility out of Bitcoin?
Yeah. I guess.
But look at the drawdown profile of Bitcoin. It's almost exactly the same as Meta. It follows it to a T. Like Bitcoin still acts like a tech stock.
But it's not following the cues at all.
Okay. Yeah, but my take is I think Mark Zuckerberg is actually Satoshi. What do you think?
So Balchunas tweeted, IBIT is now Harvard's largest position in its 13F and its biggest position increase in Q3. Pretty wild. Harvard. Here's my question about Bitcoin. What is the next catalyst? Because all of the promise, all of the catalyst, which was ETF adoption, institutional buying, it all happened. So what's next? Like, what breaks the spell? Now, maybe it's just the bull market resumes, like the broader macro bull market comes back, but I don't know. So I don't know the answer to your question. I don't have a very strong.
I guess the catalyst would be money just keeps pouring in. People have it on autopilot now because of the ETF.
but that's
advisors keep putting money in.
That's not a catalyst. If there's just like auto flows in,
I don't see why that's not a catalyst. If more money keeps pouring in, how is that not a good catalyst?
Because that's
to go up.
Because that's literally what's been happening for the last year, and it's gone nowhere. It's flat. It's down on the year.
Yeah, but it pulled forward so many gains, right? It's down on the year, but it's still up a lot from. I don't know. But do you still think that it is a precursor of things to come? And like, okay, the stock market is going to roll over now, or is it not like that anymore?
I think it's different every time. Sometimes it is, sometimes it isn't. I don't know.
Yeah, that's fair.
All right. Let's talk about. You wrote a good post on the 50-year mortgage, and I guess this is a very sensitive topic. I think people hate more government intervention, more fake money. I think they hate that people that would use the 50-year mortgage are people who could least afford it, because you're not really saving a lot of money and you're just paying way more interest.
Yeah, you'd be harming like the middle and lower class,
right?
Probably,
because you ran a calculation on a was this a $500,000 mortgage, Ben?
Yeah.
So the 30-year mortgage monthly payment is $3,000. The 50-year is $2,630 and change. So it's a difference of $366 a month, which is definitely, not trying to minimize that. That's not nothing, but you're looking at 80% interest in the beginning for a 30-year versus like 95% interest. It's all money. It's all money to the bank.
And here's the other thing. I looked at this using the same interest rate. I said 6%. A 50-year mortgage would definitely be a higher interest rate too. So it would take the monthly payment difference down even more, because you would assume the 50 years probably if 30's at 6,
okay, you should have done
50 years probably at 6.5. So I didn't even do that. So
okay.
The monthly payment is even worse.
Got it. No, the monthly payment is less.
That's what I'm saying. You'd have less of a savings.
No, you're saying the 50-year interest would be less.
No, the 50-year interest rate would be higher.
Right. My bad.
So your monthly payment difference would be even lower.
Allison Schrager said, I think the 30-year fixed rate is a freak of financial nature, something that requires tons of intervention and causes all sorts of distortions. But I'm not sure why a 50-year is so much worse.
That's fair. Yeah. How many people actually live out?
How many countries do floating rate mortgages?
Most of them.
Most of them? I know Canada does. A lot of European countries.
The U.S. is kind of on its own island.
But so what happens in inflationary periods when interest rates go up? It's like, I can't afford my mortgage.
Yeah, your payment goes up. Yeah,
right.
I think a 30-year fixed rate mortgage is one of the greatest financial inventions that we've ever done in this country. Some people hate it for whatever reason. I think it's amazing.
All right, we're going to talk about this. We're going to do an episode on home stuff with our friend Logan Motoshame, because we spoke about this with Derek. The median age of first-time home buyers is now 39 years old, according to the National Association of Realtors.
No, 59.
No, that's all buyers.
Yeah, all buyers. So
I said first-time buyers. It used to be 30, and now it's like 39.
Yeah, so I think they said 40 last week, NAR. And this Conor O'Brien puts out all the other surveys saying, wait a minute, is it really 40? If you look at these other surveys, it doesn't look like it's increased at all. And so a lot of people are saying, wait a minute, the NAR data is bad. Their survey is bad. These other surveys are right. So all this stuff that we've been saying, like the first-time home buyers now got to be 40 years old or something, that might be wrong. And honestly, and we've been using this data.
Yeah. Everyone's been using this data to support the case that millennials are screwed, housing is broke, which, by the way, both doesn't mean that it's not, but if the data that's supporting that argument is...
It sounds like the data is faulty, and Logan's going to kind of set the record straight for us. So that'll be out hopefully soon. All right, there's a story in the Wall Street Journal, New York Times. They rushed to buy homes during the pandemic. Now some feel trapped. And it talks about how Americans who bought their first houses when mortgage rates were low, now they're ready to move, but they feel locked in by the rates. I'm sorry. We can't feel sorry for everyone. Not everyone gets your sympathy.
What's the problem now?
They rushed. So they have all these stories about these people who rushed in to buy a house in like 2021 because rates were low and houses are going fast. And now they their life has changed, so they want to move, but they can't because they're stuck in the 3% mortgage.
Sorry.
You
Right.
Not everyone gets your sympathy. Like if you bought a house and it's up 50% and you have a 3% mortgage, but it would be expensive for you to move, you don't get any sympathy. The person who didn't get to buy and didn't get the 50% price appreciation and didn't get the 3% mortgage, they have my sympathy. Not you.
Yeah.
Not everyone deserves your sympathy. Okay?
Yeah.
And I have a thing coming later about I'm it's going to seem like I'm looking for sympathy, but I'm not. Sometimes you just have bad luck.
All right, we'll skip the Schwab stuff.
If you save something in the doc for 2 weeks in a row, delete it. It's never going to happen again. Come on, it's not going to happen. There's too much stuff that happens in a given week. How many pages?
All right,
do we have in
fine.
the
You know
doc
what? No, we'll do this real quick. So Schwab announced that they're buying Forge Global. They project in their press release that private wealth capital allocated to alternatives is expected to reach $13 trillion by 2032, up from $4 trillion today. That's aggressive. I gotta be honest.
How about this for an analogy? Private markets to financial advisors is like AI to people. Like some people just don't want it.
Yeah.
Right? It's the same thing. Like we're gonna force it down your throat, but a lot of people don't want it at all.
Hit the nail on the head. I gotta be honest. I had no idea that Forge was public. They went public in a SPAC at a stupid valuation, $6 billion, like everything else. Looks like they're getting bought at like $600 million, something like that.
Oof.
So here's my take. I think that the private market stuff is going to happen. I don't think that there's going to be a widespread revolt that sort of stops it in its track. I think it's done. It's just a matter of degrees and what we get.
I think they're just going to be disappointed in the flows into this stuff.
Yeah, I think that could be too. I think they could make a hard push and the flows don't reciprocate.
However, if we go into recession and interest rates go back to 0%, which I think they will, I think you said it's never going to happen again.
You really do?
Oh yeah, definitely. If we get a recession in the next 3 years, interest rates are going to zero.
I love this take.
Market down.
All right, good for you. Finally, a stand.
Okay. And when that happens, are people going to look at privates again and go, oh, actually, private credit's 8 and this is 0?
Well, yeah.
So that could happen.
So, all right. So my take on this is it is going to be a rocky transition between here and 20 years from now when this is all available. And I do think that in 20 years from now, people are going to look back and be like, wait, seriously? There was a time where people couldn't invest in this stuff? Why?
Yeah, you're right. There'll be better wrappers and there already are in a lot of ways. But
so PitchBook, and I don't know if I'm the only one that reads this stuff. I feel like I never see it being circulated, but they do a weekly rundown that's really, really, really super duper high quality. So I read it.
I guess you got your ear to the ground on the private credit stuff, huh?
The credit pitch from PitchBook. You damn right I do, Ben. They say while the 12-month run rate of interest income from payment in kind loans, Ben, to your point, I could hear people's eyes glazing over who gives a shit? Well, I give a shit. The payment in kind loans, which basically is all right, things aren't great right now. I'm not going to pay you cash right now. Just tack it on. It's an IOU to the end of the payment. Payment in kind loans. Cash. Payment in kind loans for the top 15 exchange traded BDCs remains a hefty $1 billion. It declined in the second quarter, which is the third straight quarterly dip, perhaps indicating that lenders have reached their threshold for non-cash paying interest. So lenders are saying nope, been there, done that. You pay.
Okay. Fair enough.
All right. So this brings us to Blue Owl. So the Wall Street Journal had a report not long ago. Blue Owl Capital was an upstart investment firm that lent money to mid-sized U.S. companies, such as Sara Lee Frozen Bakery. I hate frozen bakery food. You?
I don't have an opinion.
Okay, fair. These days, Ben's I'm f***ing over this. Can we just move on? These days, the firm is financing massive data centers costing tens of billions of dollars for the likes of Meta and Oracle, a sign of just how quickly Wall Street has become the enabler of America's artificial intelligence boom. So they showed a chart looking at the bond issuance by big tech AI companies, and it's more now than it has been the past several years combined. And this is before yesterday, Amazon announced that they did a $12 billion offering. So like I mentioned earlier, the stock Blue Owl is getting killed. It is in the epicenter of two places you don't want to be. Number one, BDCs are getting slaughtered. The liquid BDCs are getting slaughtered. People don't believe it. They're scared of First Brands, Tricolor, whatever. They're selling, rightly or wrongly. They're selling.
This is this is a lot like AI, where it's the skepticism has kept a lid on a lot of this stuff.
Yeah. So By the way, I sold Blue Owl was a stock that I own. Thank goodness I sold it a couple of months ago. I think if you're selling it down here, you're a donkey. That's just my opinion. But then and also, so there's the BDC side, there is the AI skepticism side. Hey, wait a minute, like this deal with Meta, like they have an opt out, like what's going on here? And then also there was a really gnarly article in the Financial Times. Blue Owl private credit fund merger leaves some investors facing a 20% hit. And I encourage you, if you're interested, to read the article. It's not great.
No, it's not great.
We're already
going
log in this topic, but there's some forced mergers happening. I think there's pending shareholder votes, but it's not pretty.
So they did a picture of these guys when they went public or something. They rang the bell. Has anyone ever looked cool, like cheering the ringing of the bell? You can't look cool. It's like wearing Crocs. You can't look cool doing that.
Can't.
Okay. Yeah. But yeah, a lot of this stuff I roll my eyes about with private credit, but like I think this is a legitimate story worth paying attention to.
This is a story. Absolutely. Ben, there was an article in Charter, or a great survey, visual in Charter, showing many young Americans are jilting marriage. So you don't see that word jilting too often. The share of U.S. households with married couples peaked at 79% in 1949 and is now down to 47%. I was talking to Josh the other day. I feel like divorce is like on the decline. Now, I'm sure there's data for that, but just anecdotally, I feel like divorce was so hot in the 90s. My parents got divorced. A lot of people's parents I know got divorced.
Think about how many movies dealt with divorce in the 90s.
Mrs. Doubtfire killed me.
Every family movie had a divorce in it.
What was my dad thinking taking me to see Mrs. Doubtfire? Way too soon. Anyway.
Santa Claus, a Christmas movie, had a divorce in it.
This is all part of, that'd be a good list, top 10 divorce movies. This is all part of the bigger story of young people taking longer to do things that was once done earlier. Maybe not a popular take. I don't think you should be getting married in your 20s and buying a house. I think that's,
no.
In fact, I think
the
that's
fact
part
that people
of
are waiting longer, I think is a good thing.
That's part of a lot of the reasons.
And that makes you more mature and you're a parent as well. Like I don't think it's a big deal.
You have no business having 3 kids in a house before you're 30. Now, I know people make it work, but all of America, it's too much responsibility. I think this is like this is more normal.
Yes, and they're asking the percentage of 12th graders saying they're most likely to get married in the long run.
I didn't even look at that.
I can't trust a survey of high school students. I'm sorry,
yeah.
They lie. All right, quick PSA. This is from the Wall Street Journal, but a bunch of other places had it. The limits for your retirement accounts are going up in 2026. 24,500 up from 23,500 for your 401k. 7,500 up from 7 for your IRA. You get a bunch of extra money for 50 or older if you're 60 or older. We spend a lot of time focusing on the markets, right? And focusing on investments and stocks and private credit and all this stuff. If you max your 401k out, it almost doesn't matter what you invest in. Put it in something, anything with risk, and you're going to do better than most people.
I endorse this message.
Sometimes you have such a bad day that you're not even mad. You don't swear. You just kind of do an angry laugh. That was my day yesterday. Let me tell you what happened my day yesterday. I start off just a very bad Monday. My wife's car is flat tire, right? So I got to bring it into Bell Tire to fix. There's a screw in it. I can hear it coming out. I have to take the tire off myself. I know how to change a tire now. I can't wait till the robots come and do it for me. So I got to bring the tire in. So it's 30 degrees out. My fingers hurt. I'm trying to, I'm hitting my knuckles against the thing.
Oh, that hurts.
So flat tire. In the morning, sick kid. My daughter has an upset stomach, has to come home. I didn't have to deal with it, but that's another thing. Finally, we did a bunch of home projects I've been talking about. We had new floors. We painted the walls. We painted the trim. Everything looks nice. And then the door is just all beat up from the kids all over the years. And then all the work we had done, the door from the garage to the house is all beat up. So I said, you know what? I just want a new door. It'll look nice. It'll make everything look finished. So one of the 2 big home improvement places, there's 2 of them. I'm not going to say the name, but it was one of them. I said, I just needed a door. Can I just pop the pins out and put the new door in? They could say, no. What you do is, because they might not fit, you have to get a whole new door. So it's the frame, and we'll put the bottom plate on, and it's new trim, and it's going to look so nice. Just do the whole thing. It's a little more expensive, but it'll look so finished. You know what? Yeah, I'm doing a project. Let's do it right. So the guy shows up yesterday, and my wife calls me and says, this does not look good. Just the look of it doesn't, you can just tell. So he walks in and he said, where's the door? And she said, you're installing it. You should have the door. He said, I don't have it.
Oh.
So he had to go back to get it. Now this guy's installing the door. He takes the trim off, he puts the door on, and he's there for like 3 hours at this point already. He doesn't have the door on. It's just this open, and it's 30 degrees out and it's cold. And he's holding it, and he said, I need to call for some. I hear him on the phone. He's calling. He's asking for help from someone. He said, like, basically, I don't know what I'm doing. This guy had literally never installed a door before. Now, what do you do in this situation? So he has his buddy come.
I mean, I know what you do. Nothing.
So this guy, his other guy comes and he's helping him. This guy is walking through. I'm like, all right, fine. You know what? That was a little rocky at first, but this guy, he's got a helper now. This guy's going to help him. This guy's saying how you have to be level and to shut the door. It's like, there's all this stuff you have to do, right? So this guy's helping him. I'm like, this will be fine. This guy's here now. It'll be better. It's a bad start. This guy helps him a little bit. Then he leaves. So this guy's finishing. This was, honest to God, the worst. It's comical how bad it was. There's caulk everywhere. He put holes in the wall. There's dents. There's dings. The door barely shuts. This is, I couldn't.
So what, you let this happen? I mean, what's the result?
This guy he was there till 7 p.m. last night. He got there at 2. And he goes, all right, I'm done. And he leaves. He did not have anything to clean with. He asked us if he could borrow a broom and a dustpan to clean because he didn't have anything. So of course I called the place today. I said, this is unbelievable. Like, our house is like ruined. You've got to come back and fix this. So they're going to. But this was like, if I asked him to fix it, he was going to make it worse. It was a project from hell. So the guy finally leaves. We're like decorating for Christmas. And then it's time for bed. All right, kids, go to bed. And George goes into the bathroom and proceeds to exorcism. His head turns around and throws up all over the wall.
No.
On the walls, all over the toilet, on the floor. The worst smelling vomit I've ever smelled in my life. Courtney had to leave because she was gagging. So I had to clean it up. I needed like a hazmat suit. So that was my day yesterday. 2 sick kids, a flat tire, and the renovation from hell.
Wow.
But it's one of those times where, you know what? I poured myself a big glass of red wine and said, let's rip the Band-Aid off and start new the next day.
How's your day
So that's
today?
where I'm at. I'm doing good.
Everything good?
I'll survive.
That's a bad day.
That's a bad day.
All right.
Let's do some recommendations.
Did you watch Death by Lightning?
I loved it.
Oh, you did?
Did you watch it?
I did.
Okay. So I thought it was fantastic. It was 4 episodes. I thought Tom Wambsgans as the crazy guy
He's unbelievable.
He's so good. But here's the thing. So I've heard of James Garfield before. I've heard of Chester A. Arthur. I've heard the names. I had never heard this story before that he was assassinated. I had no idea this happened. No clue.
So, okay.
I felt like I was learning as I was watching. It was it was 4 episodes. That was the best part. 4 episodes.
All right. So the book, Destiny of the Republic, is by one of my favorite authors, Candace Millard. Highly recommend her books if you are interested. So she wrote a book called Destiny of the Republic. And I don't know if you noticed this. You probably didn't, but the 4th episode was called Destiny of the Republic.
Okay.
So the cast was amazing. And I thought Wambsgans was amazing, like totally amazing. And it was cool to see these characters brought to life.
Michael Shannon too. They kind of looked like the guys too.
They were great. And I did enjoy it, but it kind of felt like such a Netflix show. Like, what was the point of it?
See, I'm sorry. I thought I was going to say I've been complaining Netflix has had low quality shows. I thought this was their highest quality show in a while. I thought it was fantastic.
Okay.
Maybe because I just didn't know the story. So I felt like I was learning.
The tone was interesting because it was like, so it was sort of like what genre was that show? It was
I thought it was because they had some humor involved.
Yeah.
Like I thought that, I don't know. I thought that was it. But the way that he became president with his speech and like, I thought that was just really well done.
Yeah, he was an accidental president. But Wambsgans, where has he been? Because he is so good. He reminds me of like Brendan Fraser in The Mummy, but better.
Which they're bringing back, with Brendan Fraser and Rachel Weisz. It's coming back.
I can't
original
wait.
People.
I love that movie.
Okay, so I've got an Audible of the week.
Okay.
So at the end of his book, Andrew Ross Sorkin actually mentioned this book and said, I was trying to frame my 1929 book after this. So it's called...
Oh, is this the Titanic one?
A Night to Remember by Walter Lord. And all it is there's no preamble. There's no backstory. There's no like biography stuff. It's just, this is what happened when the Titanic hit the iceberg, and this is what all the people did.
Okay.
And it's like and it's not that long. On a 2 times, you can listen to it in 2 hours. It's really, really good. Just like what happened and all the people being like, wait, like people getting out of the rooms at night and being like, what happened? We hit an iceberg. Go back to bed. Don't worry about it. And like all the stuff that people decided to bring and the fact that there weren't enough lifeboats and really, really good. I enjoy it.
Okay. Good rec. All right. I watched the Eddie Murphy doc, Being Eddie Murphy. I assume that you were a huge Eddie Murphy fan. Obviously, who wasn't?
Yes. Love Eddie Murphy.
Yeah. It's worth watching. Not the best doc I've ever seen, but it's worth watching. So at the end, and this is not a spoiler really, but at the end, so at one point during the doc, he's talking about how he ordered 2 dummies so he could be like a ventriloquist if he ever does stand up, and it's Bill Cosby and it's Richard Pryor. So at the end, of course, he hasn't done stand up because he got too famous since 1987, I guess. I don't know if Delirious was the last one. Oh wait, was Raw 87? Can't remember which was which.
I used to own Delirious.
Ridiculous.
Like, I owned the DVD.
Funniest thing ever. So, but anyway, so at the end of the doc, the puppets come and he does like 30 seconds and it's like the funniest thing ever.
Okay. He was.
It's just like, come on, man. I know you're too famous, but like, please.
He was one of those guys, when he was on Comedians in Cars Getting Coffee with Seinfeld, he still had it in him a little bit, but he got too big, I think. But he, in one of his, I can't remember if it was Raw or Delirious, he had this bit where he talked about how all Italians thought that they could beat people up after Rocky.
Yeah,
oh my gosh. It's just, that's one of my favorite bits of all time.
Yeah.
It's so good. Truly
a one-of-one legend. All right, lastly, speaking of comedy, I saw Louis at the Beacon. So in 2014 or maybe 15, when was Deflategate? I can't remember. But whenever that was, Josh and I were at Artie Lang's apartment. I don't think I've ever told this story before. Have I? On air? I don't think so. All right. So Artie Lang was my favorite character on Howard. I am a lifelong Howard Stern listener. And when Howard and Artie broke up, when they had that fight, I remember I was in my bedroom like, wait, why are mom and dad fighting? And so anyway, Artie was like my guy. And we were in his apartment and it was surreal to say the least. It was Josh, one of Artie's friends is a comedian who was a fan of Josh's. So Josh and I did Artie's podcast. Josh's friend was like a couple of hours late. So me, Josh, and Artie were hanging out in his apartment from like 11 to 2. We watched SportsCenter when Goodell was talking about Deflategate. And then we watched my favorite documentary of all time. It was called The 7-5, I believe, about the corrupt, the 7-5, about the corrupt cops in New York City. And we were just watching them. It was unbelievable. Really a pinch me type of moment. Like, how did I get here? And so Artie's friend walks in and he said, hey, you hear about Louis? And Artie's like, yeah, I heard some stuff. What did you hear? And so they
that's a good impression.
So he tells him, I'm like, wait, what? Huh? Louis is my favorite comedian of all time. And it was what came out. I don't know if it was a couple months later or a year later, whatever it was. I sort of like kind of forgot about it. I was like, wait, what? And then it came out. Anyway, so Louis, needless to say, did some bad things. He's been canceled forever, canceled himself, disappeared, whatever. All right. All that aside, it was so good. Like, for me, that is my type of comedian. Just belly laughter, unbelievable. So I don't know if he doesn't do nothing. He does like his own thing. So probably be on his website in a couple months. It was such a good special.
Okay. Yeah. We saw him live before he got canceled. And it was one of the best shows I've ever been to.
I mean, it's rare to like get like multiple actual belly laughs, right? Where like your face hurts.
Yeah. One of the smarter comedians.
All right. And then, you know what? We're going to save this for next week. So Michael Sembalist did a really good dive onto the media landscape, Netflix, YouTube. And he has he ranked his top films in the 21st century. So we're going to talk about that, but next week.
He's a Ben guy.
The
Ballad of Wallace Island is number one. He's a Ben guy.
Save it for next week. He's a huge Ben guy. That was my first observation. He is a Ben guy. All right. Thank you very much.
Survey in the show notes, please.
Survey in the show notes, please. Thank you very much for listening. Thank you, Duncan, and the entire production team for doing what they do for us every week. Thank you for listening. Animal Spirits at thecompoundnews.com. We will see you next time.